What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol KOSS for Koss Corp. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, you can see that this will be an update, but none of our old levels are really relevant anymore, so we're going to clear the drawing set. And again, I just show you myself doing that so you know it's okay to start from scratch. You generally want to see your charts with as much clarity as possible. Don't feel bad for getting rid of your old levels on a chart. We're going to come in and point out the most obvious areas of support and resistance, then we'll talk more nuance as we drill down to the 30-minute intraday time frame. But for now, this daily roadmap is looking fairly decent, something that looks like this. I like those levels that we have now. The next thing I would point out before we get to that 30-minute is just, do we have a resistance trend line? And the answer is yes, right? If I do something like that, you can clearly see a perfect fit from our high here, so that's touch 1, and touch number 2 on today's session. I didn't want to draw it in from this exaggerated high because then it would be way too steep, something that looks like this, just no good, right? So this, to me, more price interaction, the better. So in terms of the daily bar that actually printed, sure, there was an uptick in volume, but overall, I mean, this is a fairly bearish candle. Big upper wick, I'd say it's greater than 50% of the body. We'll see in just a second on the 30, indicating some serious selling pressure at the resistance trend line as well as this horizontal area, right? That's where we topped out from that little pop that we saw in the latter half of 2021, but also I meant to say in here, December, right? So with that kind of out of the way, we know that the daily chart is not really fantastic. It is more bearish than bullish. If we just scrunch it up, we're in sort of a downtrend, right? We know that. So let's take a look at the 30-minute now and just kind of see where we landed from a Fibonacci perspective, zooming in a bit. Oops, a little bit too much. There we go. Taking out the fibs, coming in from the low of today's session. So it looks like, we did gap up a little bit and then some halting volatility there at one point, but just coming in from low to high just to see where we're at. Again, eyeballs are doing pretty good today. They're nice and calibrated. We did close underneath the 50% mark, which is, it's not the end of the world. Ideally, we would have supported at the 38.2 for a bull flag and then looked for a breakout. But now that we're under the 50%, that does start to change things. The one saving grace is that, we're sort of forming a bit of a hammer off of this 1192 coming from prior shelf of support in here on the daily time frame. So although it's not the best close in the world, it's also not the worst, right? So to me, if we can remain above the pivot, it's not really about Fibonacci's at this point, right? We can get rid of those. It's really about that 1192. If we can close back above that, if we can get some candle closes back above, something that looks like this, then fine. Maybe another reattempt at the resistance trend line can actually take it out, but we would need to see some significant volume coming into the stock to make that a reality. Notice that we only really saw that parabolic move here as volume dramatically ramped higher. We're talking about 150,000 shares per 30-minute bar. It's really not that much to ask for, especially on a sub $15 stock. If new eyeballs start hitting this name, if there's renewed interest in it, maybe this will unfold, but your clearest indication is just going to be down here with volume. If volume's not there, I wouldn't look for any higher inside of Koss. If volume is there, and just to give you a ballpark idea, like I wouldn't be surprised if you saw, 250,000 shares per 30-minute bar sustained over a period of time. So volume that would look like this, right? Much higher than what we saw on today's session, then fine, there is potential for that breakout higher. But if it's not there, if you don't see that down below, probably stay away, honestly, noting the significant retracement that we saw into the afternoon. And again, big upper wick on the daily. Likely we just come back down to the lows if the volume isn't there. I want to be abundantly clear about the volume being a necessary requirement if this is going to run back to the upside. In that case, sure, we do have some upside targets planned out. We have that 1321, today's high of day. If it goes, 50 SMA is in between ranges here. I would watch out for that on the daily time frame, and then it's ultimately here at 1521. Again, caveat has to be volume. I can't make that clear enough. That's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.